Hello, my dear students. Hope you guys are all doing good. Hope you guys are all perfectly fine. So, in this session, I'm going to make you understand in a detailed manner the provisions of SA 560, which is going to be talking about subsequent events. So, if you watch this video till the end carefully, you will get a very good conceptual clarity of the provisions of SA 560. So without any delay further, let us directly jump into the concepts. What is this SA 560? What is the meaning of subsequent events? What exactly does this standard talk about? All that things we will try to understand it now. So let me begin without any delay further. First of all, let us try to understand this term. As you could see, the title of the chapter. What is the title of the what is the title of the standard? SA 560 talking about subsequent events. So first we should become familiar what exactly is the meaning of subsequent events, that we all have to get the clarity. So have you heard about this term subsequent events earlier? Did you come across this term subsequent events earlier? Yes, you would have definitely come across this subsequent events earlier. Where so when you are actually understanding accounting standards, as a part of AS4, you might have understood, you might have come across the term called events occurring after the balance sheet date. You might have already come across this term, events occurring after the balance sheet date. So we have already come across this term subsequent events when it comes to accounting subject. As per accounting standards, we already know what do you mean by this subsequent events. See, before we talk about what are subsequent events as per SA 560, I want you all to get familiar what exactly accounting standard talks about subsequent events. So I'm not talking about SA 560 now. Before we get into SA 560, let us first try to understand what does accounting standard say about subsequent events. So once again, I'm telling us, I'm not going to talk for some time relating to audit. We are going to talk about subsequent events as per accounting standards for the initial 5-10 minutes. So once we recollect all that things regarding subsequent events as per accounting standards, then I will bring you back to the standards on auditing. Then I will explain the auditing related matters. So first, let us discuss what are subsequent events as per accounting standards. So you might have read in your accounting standards that subsequent events are those events which are happening between the date of financial statements and the date of approval of financial statements. Those events we are going to call them as subsequent events. This is what we all know. Once again, I am telling this is the definition as per accounting standards. I will come to the auditing later. So AS4 defines subsequent events as those events which are occurring between the date of financial statements and the date of approval of the financial statements. So those events we are going to call them as subsequent events. And as per accounting standard, these subsequent events are divided into two categories. So we call it in the common parlance adjusting events, and the other one is non-adjusting events. Sir, what do you mean by adjusting events? What do you mean by non-adjusting events? Very simple. Adjusting events are those events which conform to the conditions which are existing already as on the balance sheet date. So adjusting events are those events which conform to the conditions already existing as on balance sheet date. Whereas non-adjusting events are those events which conform to the conditions existing after the balance sheet date. If there are some events which provide additional confirmation to the conditions which are already existing as on the balance sheet date, that we are going to call it as adjusting events. However, if there are some events occurring after the date of financial statements, but they conform to the conditions existing after the date of financial statements, we call them as non-adjusting events. One simple example I will tell you. Assume that the date of financial statements. First of all, what do you mean by date of financial statements? Date of balance sheet. Assume some company X Limited is there. This company's financial year 22-23 we are currently looking into. Just imagine. Now, what is the balance sheet date? What will be the date of financial statements? 31st of March 2023 is going to be the date of financial statements. Now, assume that some event happened on 5th of April. Some event happened on 5th of April 2023. After the balance sheet date, some event happened. Now, those events I am telling are divided into two categories, adjusting and non-adjusting. Sir, what is example of adjusting event? Let me give you one example. First, I will tell you event. You are supposed to answer to me whether that is an adjusting event or a non-adjusting event. A fire accident happened on 5th of April 2023. There is a fire accident which happened on 5th of April 2023. So a fire accident happening after the balance sheet date, is it adjusting or is it non-adjusting? Does it conform to any conditions existing as on the balance sheet date? Will you get any dream as on 31st of March only? There might be a fire accident. No, right? So an event happened, like a fire accident has happened. This event does not conform to any conditions existing as on balance sheet date. Yes or no? So this fall under a fire accident. This actually falls under non-adjusting events. This actually falls under what? Non-adjusting events. They do not conform to any conditions existing as on the balance sheet date. Let me give you one more example. See, as on 31st of March 2023, we have one debtor. This company X Limited is having a debtor, Mr. A. There is a doubtfulness regarding recovery of money from this debtor. So that's why company has already created a provision of 20% of provision they have created. But as on 5th of April, the company came to know that Mr. A has completely gone bankrupt. He filed for insolvency. Not even a single rupee was recoverable. Not even a single rupee was recoverable. So he went bankrupt, and he declared that he will not be able to pay even a single rupee also on 5th of April. This event happened after the balance sheet date. Now, this debtor going bankrupt after the balance sheet date, in this case, is it an adjusting event or non-adjusting event? It is an adjusting event. Why so? It is conforming to the conditions which are already existing as on balance sheet date. So as on balance sheet date, we already have a doubt that this person might not be able to repay. So this condition only further confirmed by happening of an event on 5th of April 2023. So this will fall under adjusting event. So debtor going bankrupt. So will fall under adjusting event. So as per accounting standard, why we need to divide subsequent events into two categories? Why we need to divide them into adjusting and non-adjusting? Why? Because their accounting treatment will differ. Depending on whether an event is adjusting event or a non-adjusting event, its accounting treatment will have an impact. Sir, how it will be impacted? Very simple. If it is an adjusting event, it is required to be adjusted directly in the financial statements. It requires to be adjusted directly in financial statements. Take for example, we came to know that debtor went bankrupt completely on 5th of April. But since it is conforming to the conditions which are already existing as on the balance sheet date, as on balance sheet date only, will create a 100% provision, not just 20%. So this requires adjustment in the financial statements directly. We'll go and update our financial statements directly about that event. Regarding which events? Adjusting events. However, if an event is a non-adjusting event, we will not adjust it directly in the financial statements, just we give a disclosure. Just what we do? We just give a disclosure in the financial statements. That's all. So this is what not I am teaching this now. This is something which you are already aware as a part of your accounting standards, not from the auditing perspective. This is all something which you have already learned as a part of accounting standards. So what is the summary? Whatever I have told you till now. So first we told that as per accounting standard, subsequent events are those events which are happening between the date of financial statements and the date of approval of the financial statements. If any events are happening between these two dates, that we call them as subsequent events. And those subsequent events in the accounting standards, they have been broadly divided into two categories. Number one, adjusting events. Number two, non-adjusting events. Sir, what are adjusting events? Those events which conform to the conditions which are already existing as on the balance sheet date. Non-adjusting events, they do not conform to any conditions existing as on balance sheet date. Sir, why we need to divide them into two categories? Why? Because accounting treatment differs. If it is an adjusting event, it is required to be adjusted directly in the financial statements. If it is a non-adjusting event, just disclosure is required. We don't go and adjust it in the figures of the financial statements. Clear? So this is what regarding accounting standards related subsequent events discussion. And if you remember, guys, you tell me, what is the purpose of accounting standards first of all? Why accounting standards are given? What is the objective of any accounting standard? So accounting standards are given in order to guide the entities in the preparation of their financial statements and maintenance of the books of accounts. This we all know. What is the ultimate purpose of any accounting standard? So accounting standard is going to give us guidance in relation to the accounting treatment, how to do the accounting for certain items. For that purpose, accounting standards are given. So here, the purpose of accounting standard is fulfilled. Accounting standard has explained what is the accounting treatment for adjusting events, what is the accounting treatment for non-adjusting events. Now, if you come to standards on auditing, SA 560, when I say standards on auditing, what is the objective of standards on auditing? See, standards on auditing will not prescribe any accounting treatment. Standards on auditing are not going to talk about accounting related matters. But however, standards on auditing will give guidance to the auditor on how to do the audit. This we all know, no? So accounting standards, they give the guidance relating to accounting matters. Whereas standards on auditing SAs will give the guidance regarding how audit has to be done, how certain items are required to be verified. So SA 560 is going to give guidance of how to conduct audit of the subsequent events, what things we need to verify regarding subsequent events, what audit procedures we need to verify or we need to perform regarding subsequent events, what reporting requirements will be, how reporting requirements will be impacted because of subsequent events, what will be auditors responsibilities regarding subsequent events. That guidance was given under SA 560. Okay, so the objectives of accounting standards, standards on auditing, both are different. Accounting standards talks about accounting matters. Standards on auditing gives guidance about auditing related matters. So SA 560 is going to talk about, as an auditor, what are your responsibilities regarding subsequent events. But before we can understand what are auditors' responsibilities regarding subsequent events, first we should know how the term subsequent events was defined in the SA 560. How the term subsequent events was defined in SA 560. Don't say, sir, just now you have given the definition. No, that definition was as per accounting standards. That definition was as per what? Accounting standards. So first what we will do is we will try to learn what is the definition of subsequent events as per standards on auditing. That we will try to learn and understand. Then we will have a look at what will be auditors' responsibilities. Shall we do it, guys? Let us do it. But before we can understand what are subsequent events, we need to understand the meaning of certain dates. Before we can understand the meaning or definition of subsequent events, we need to get familiar with some dates. Sir, what are that dates which we have to get familiar? Number one, date of financial statements. Number one is what? Date of financial statements. Sir, what is the meaning of date of financial statements? You all are aware of it. So what is the meaning of date of financial statements? Nothing but the date of balance sheet of the respective financial year. That only we call it as financial date of financial statements. If you take 22 23, what is the date of financial statements for this year? 31st of March 2023 will be the date of financial statements. If you take the financial year 21 22, what will be the date of the financial statements? 31st of March 2022. So 31st of March of respective financial year will be known as the date of financial statements. Then next one more date which we need to understand, which is date of approval of financial statements. Sir, what do you mean by this date of approval of financial statements? Very simple. See, once the financial statements are prepared, take for example X Limited company, the management of the entity has prepared the financial statements of this company. Now, after the financial statements are prepared, the board of directors of the company has to sign the financial statements, accepting the responsibility for that financial statements. So the date on which the board of directors sign the financial statements, that date we are going to call it as date of approval. Approval means what? Accepting the responsibility. So once the financial statements are prepared, the management of the respective organization will come forward, will sign the financial statements. By signing the financial statements, they are indicating that they have approved, they have accepted the responsibility of the financial statements. That means they are accepting whatever financial statements that have been prepared that contains correct information only. We prepared financial statements in a proper way. That responsibility they are accepting. So when I say date of approval of the financial statements, in simple terms, if I have to put it, the date on which the board of directors or the date on which the management of the entity signs the financial statements. By signing the financial statements, they're accepting the responsibility for the financial statements. So assume that financial year 22-23 financial statements, date of financial statements will be 31st of March 2023. Once the financial statements are prepared, somewhere the management approved the financial statements on 10th of April 2023. The management the board of directors of the company came forward and they signed the financial statements on 10th of April. Now the 10th of April becomes date of approval of financial statements. Clear about the two dates? Number one, date of financial statements. Number two, date of approval of financial statements. Number three, date of audit report. One more date which we need to understand, which is the date of auditor's report. Sir, what do you mean by date of auditor's report? So once the audit gets over, auditor will give the audit report, no? In that audit report, if you remember SA 700, in the contents of the audit report, the last content of the audit report will be date, place, signature, etc. So the date on which auditor is signing the audit report, that date which is there in the auditor's report, that we are going to call it as date of auditor's report. In simple terms, if I have to put it, date of signing of auditor's report, or even if I put it in more simpler terms, the date which is mentioned in the auditor's report, that we call it as date of auditor's report. Okay. Now I have a doubt. Let me put that doubt before you. Between the date of financial statements and the date of auditor's report, which one should be earlier? Which one should be later? Or let me try to not over complicate the question. Let me put it in simple terms. So I have explained you about these two dates. What do we mean by date of approval of financial statements? I've also told you what is the meaning of date of auditor's report. Now my question is, between these two dates, which one should be earlier? Which one should be earlier? Should the date of approval of financial statements be earlier, or should the date of auditor's report be earlier? See, the answer here is the date of financial statements, the date of approval of financial statements should always be earlier than the date of auditor's report. If I put it in other way around, the date of approval of financial statements should never be later than date of auditor's report. The date of approval of financial statements should never be later than the date of auditor's report. Why, sir? Simple logic. Simple logic if you keep in mind. So when I say, assume that the financial statements are prepared on 31st of the financial statements are prepared for the year 22-23. So management will prepare financial statements. See, first management should accept that responsibility for the financial statements. Then you have to do the audit. Then you have to sign the audit report. See, without management accepting the financial statements, without management accepting the responsibility for the financial statements, who the hell are you to take the responsibility for the financial statements by signing audit report? Able to understand what I'm trying to say? So first financial statements will be prepared. Let the management accept the responsibility for that financial statements by signing. If the management themselves are not signing the financial statements, then what is the itching for you to do the audit and sign the audit report? That should not happen. So that's why first management will approve the financial statements, then only auditor will give the audit report. So there should not be any case where the date of approval of financial statements is later than the date of auditor's reports. That should not happen. That should not happen. Sir, what will happen if date of approval of financial statements is later than the date of auditor's report? Then auditor is a bigger fool there. So management prepared the financial statements, they gave it to you, you did not wait for the management's approval, you went ahead, did the audit, you signed your audit report on 5th of April 2023, then the management told, Tuch, it is cheating we have done, the financial statements, whatever we have given to you, that we are changing it now. Why? Because we did not approve, no? So like this, management will play the games with you. So that's why the financial statements will be approved by the management, then only auditor will sign the audit report. Okay, so which one should be earlier between these two days? Two dates. Date of approval of financial statements should be earlier than date of auditor's report. It should never be later than the date of auditor's report. Understood? Clear and comfortable, everybody? Now, see one more date we have to understand. Date of issue of financial statements. So one more date which we have to become familiar is date of issue of financial statements. Sir, what do you mean by date of issue of financial statements? When I say date of issue of financial statements, it refers to the date on which the financial statements are made available to third parties. The date on which financial statements are made available to third parties. When I say third parties, other than auditor and the management. The date on which the financial statements are made available to third parties. When I say third parties, it includes the shareholders, it includes bankers, it includes stock exchanges, anybody. See, generally what will happen? Why do management prepare financial statements? Why as an auditor we are doing the audit and giving the audit report? So that we can keep the financial statements and audit report in a safe locker. No, that is not the purpose. Why the financial statements are prepared and why the audit is done. See, through this financial statements and audit report, we want to pass on this information to others. Various stakeholders are there who will use this financial statements, who will use this audit report for their decision making purposes, like shareholders, bankers, creditors, debtors, government, all these people are there. So what is the actual process? First financial statements will be prepared, then they will be approved, then the auditor will give the audit report. Now the financial statements along with the audit report, they become audited financial statements. Now this audited financial statements will be made available to third parties other than auditor and client. So the date on which this audited financial statements are given to the third parties, are made available to the third parties, that date we are going to call it as date of issue of financial statements. See, these financial statements can be made available to third parties in various ways. Take for example, there is some company, Reliance Industries Limited. Reliance Industries Limited financial statements are prepared, management approved, audit is over. They have uploaded their audited financial statements in their official website. So the date on which they have uploaded their financial statements in the official website, that will be the date of issue of financial statements. Or they have made a press release. Whatever audited financial statements are there, they made a press release. Whenever that press release is made, that means on that date the financial statements are made available to third parties. Or they submitted a copy of the audited financial statements with the stock exchange. So whichever date is earlier, the companies can make the financial statements available to third parties in various ways. Either they can upload them in their website, or they can make a press release, or they can submit it to stock exchange. So whichever happens earlier, that date we are going to call it as the date when the financial statements are issued to public. Understood? So 4 dates I have explained here. Number 1, date of financial statements. Number 2, date of approval of financial statements. Date of auditor's report. Date of issue of financial statements. Quick recap shall we do? Let us do it. Date of financial statements, nothing but date of balance sheet. Date of approval of financial statements, the date on which board of directors sign the financial statements and accept the responsibility. Date of auditor's report, the date which auditor mentions in the auditor's report. Date of issue of the financial statements, the date on which the financial statements are made available to third parties. That we call it as date of issue of financial statements. Now, sir, why we understood all these dates? Because our main purpose is to understand what is the meaning of subsequent events as per SA 560. How the term subsequent events is defined under SA 560. To tell you that definition, I have to explain all these dates. Now, since we have understood these dates, now let me explain what is the definition of the term subsequent events given in SA 560. So SA 560 says subsequent events are those events which are happening between the date of financial statements and the date of auditor's report. The events which are happening between the date of financial statements and the date of auditor's report. But the fact came to auditor's knowledge, after the date of auditor's report. Some event has happened between the date of financial statements and the date of auditor's report. Some event has happened at that point of time only. But auditor came to know about that event after he has signed the audit report. Then only we call it as a subsequent event as per SA 560. Confusing? Let me give you example. I will tell you the logic also why this definition is this way. Listen carefully. I will give you example to make you understand. Assume that financial year 22-23. Date of financial statements, nothing but 31st of March 2023. Assume that auditor signed the audit report on 20th of April. He completed the audit and signed the audit report on 20th of April. Some event has happened between these 2 dates. Assume that some event has happened on 15th of April only. But this event came to auditor's knowledge when after he signed the audit report. That means after 20th of April, auditor came to know that there was some event which has already happened on 15th of April. These events we call them as subsequent events. An event happening between the date of financial statements and the date of auditor's report, but the fact came to auditor's knowledge after the date of auditor's report, that we are going to call it as subsequent events. See, if there is some event which has happened between the date of financial statements and the date of auditor's report, and the auditor has known it here only, then it is not a subsequent event. If some event has happened between 31st of March and 20th of April, auditor knew about that event on 15th of April only, then it is not subsequent event. Why, sir? See, why it is not a subsequent event is, if you know that event before you sign the audit report only, you could have taken appropriate action in the audit report only, no? There is no requirement of any guidance there. See, when we start looking for guidance, when we need guidance, regarding which events we need guidance, some event happened between the date of financial statements, date of auditor's report. We have already signed the audit report. After signing the audit report, then we came to know that that event has happened. Now we start looking for guidance. Now the specific standard reference we will see. However, if an event happened between date of financial statements and the date of auditor's report, you already know it prior to the date of auditor's report. That means you have not yet prepared your audit report. You have not yet given the audit report, then you can take whatever action you want to take in the audit report only, no? So when we start looking for guidances, when some event has taken place between the date of financial statements and the date of auditor's report, but I came to know about this event after the date of auditor's report. I already signed the audit report. Then I came to know that, oh God, there is some event happened before only. Now I start looking for guidance. In this case, there is no requirement of any guidance. If you know it before signing the audit report only, why we need any guidance? Whatever action we want to take, that we can take it through the audit report only. No. Understood the logic and also the definition conceptually. So this is what the definition of subsequent events. Guys, please repeat along with me the definition of subsequent events. Tell me what is the meaning of subsequent events. Subsequent events are those events which are happening between the date of financial statements and the date of auditor's report. But the fact came to auditor's knowledge when? After the date of auditor's report. These events we are going to call it as subsequent events. Understood everybody till here? So with this we are done with definitions. We understood what is subsequent event. We understood what is date of financial statements. We understood what is date of approval of financial statements. We understood what is date of auditor's report. We also understood what is the date of issue of financial statements. Clear everybody? So definitions we are done. Now the next step is we need to understand what is the responsibility of the auditor. We need to understand what are responsibilities of the auditor relating to subsequent events. As an auditor, you came to know about subsequent event, but the time you came to know about subsequent event, you have already signed the audit report. In this case, what you will do? What you are supposed to do? What will be your responsibilities? What actions you have to take? That is what SA 560 talks about. Able to understand the purpose of the standard? As I keep on saying every time, you need to understand purpose of the standard. If you are confident, if you are clear about what is going to be the purpose of the standard, then the concept will be very clear. Whatever they are trying to say in the standards becomes very clear if you understand what is the purpose of the standard. If you don't understand the purpose of the standard only, what is the purpose of if you don't understand purpose of the standard only, what is the purpose of, what is the intention of reading the entire content? Always there will be some gap left behind. So that's why make sure that you are understanding the purpose of the standard. Did you understand what is the purpose of the standard? So this standard is telling the auditor, is talking about what auditor is supposed to do in case you came to know about subsequent event after you have signed the audit report. You got to know about subsequent event. Now what you will do, that is what the main objective of the standard. Okay, so now what we will do is we will try to understand what are responsibilities of the auditor whenever he comes across any subsequent events, what he is supposed to do, what responsibilities he has to fulfill. All that we will try to see it in the standard. Shall we do it, guys? Let us do it now. So now we will focus on understanding what the auditor is responsible for, what auditor is supposed to do in case if he comes across any subsequent events. So for this, I will take you through the chart here. So we have this chart book. So from this chart, I'm going to explain what will be auditor's responsibilities. So if you see here, in order to understand what will be auditor's responsibilities when he comes across subsequent events, so we have divided the entire scenarios into two cases. Case 1, case 2. Case 1, sometimes what will happen is auditor will come to know about subsequent event, but the fact came to auditor's knowledge before the financial statements are issued to the common public. Other case which could be possible is auditor came to know about subsequent event, but by the time he comes to know about subsequent event, financial statements are already issued to the public. Financial statements are already given. So to some third party, the financial statements have been already given. So what they are trying to say here is, in case of subsequent events also, there could be two cases possible. Number one, auditor came to know about subsequent event before the financial statements are issued. By the time you come to know about subsequent event, the financial statements are not yet given to public. They are still with the management only. See, other case, auditor came to know about subsequent events, but by the time you come to know about subsequent events, financial statements have already been issued. Financial statements have already reached the third party. See, in both the cases, auditor came to know about subsequent event after the date of auditor's report only. After you have given the audit report, you got to know about subsequent event. But case 1, you got to know about it before the financial statements are already given to the public. Other case, you came to know about the financial statements after the financial statements are given to the public. In case if you came to know about subsequent event after the date of auditor's report, but before the issue of financial statements, what are auditor's responsibilities? What auditor has to do? This is case 1. This is case 1. In case auditor came to know about subsequent events, but by the time you came to know about subsequent event, financial statements have already reached shareholders, debtors, whoever it is, the financial statements have already been issued. In that case, what will be your auditor's responsibilities? So that I have given it under two cases. Auditor came to know about subsequent event after the, sorry, first one, this auditor came to know about subsequent event before the financial statements are issued. By the time you got to know about subsequent event, you have already given audit report. You already signed the audit report, but financial statements are not yet issued to any third person. They're still there with the company only. However, case 2, you came to know about subsequent event, but by the time you came to know about subsequent event, financial statements are already given to public. So in both the cases, what auditor is supposed to do, let us try to understand. First, we will talk about case 1. Sir, by the time auditor came to know about subsequent events, he already signed the audit report, but financial statements are not yet given to anybody. It did not reach any third party. It was not given to shareholder. It was not given to debtor, creditor, bankers. The financial statements are not given to anybody. But you have already signed audit report. Now you came to know about subsequent event. What you should do? See here what we have to do in this case. So in case auditor came to know about subsequent event before the financial statements are issued, it is a little bit favorable scenario. Yes or no? When compared with the other case, this is favorable. See, case 2 is very serious. Why case 2 is very serious? By the time you came to know about subsequent event, financial statements have already gone to shareholders. Case 1 is little bit better off situation. By the time you came to know about subsequent events, financial statements are not yet given to third parties. So now I'm going to explain what auditor will do in case 1. First, the moment you came to know about subsequent event, you already signed the audit report, but you came to know about subsequent event now. First, what you should do? Number 1, you have to discuss the matter with management. You have to go to the management and discuss about that subsequent event. Sir, I came to know about this subsequent event. Go and have a discussion with the management. As a part of that discussion, determine whether financial statements need amendment. You identified subsequent event. When you go and discuss with the management, you will realize, you will come to know whether it is adjusting or non-adjusting. If it is adjusting, it needs amendment of the financial statements. If it is non-adjusting, it doesn't need any amendment of the financial statements. So that's why we are asking you to go and discuss. So you came to know about subsequent event. First, you will go and discuss this matter with the management. After you discuss the matter with the management, then you determine whether financial statements need any amendment. As a part of the discussion, as a part of the discussion, you determine is that a adjusting event and whether financial statements need amendment. You have decided, yes, this is an adjusting event and it requires amendment in the financial statements. Then you have to go and inquire the management. Whether they are ready to amend the financial statements. So the moment you came to know about subsequent event, the first 3 steps which you have to perform is go and discuss the matter with the management. As a part of the discussion, determine whether the financial statements need any amendment. If you decided financial statements need amendment, ask the management, inquire the management whether they are ready to amend the financial statements. I found a subsequent event. I came to know it needs amendment of the financial statements. Now I will go and inquire the management. Sir, are you ready to amend the financial statements or are you not ready to amend the financial statements? See, sometimes management will be favorable. Most of the cases they will be. They will say, okay, sir, it is a subsequent event. We did not realize it. Now you have made us realize. We will amend the financial statements. Then it is a favorable scenario. So you inquired the management whether they are ready to amend the financial statements. Management told, okay, we will amend the financial statements. Management agreed. They did not create any issue. They told, okay, sir, we will update our financial statements. So if the management amends the financial statements, then what you will do? So management told, okay, sir, we will update the financial statements. They have made the necessary amendments. Now, don't you think you need to check whether they have made the amendment properly or not? You need to perform audit procedures and check that once or not? Yes. So if the management told, yes, they will amend the financial statements, then what we will do is we will perform audit procedures related to amendment. That means whether management did the amendment properly or not, that we will try to verify it by performing audit procedures. And also we try to obtain sufficient and appropriate audit evidence whether they have done the amendment properly or not. So if the management comes and says, sir, we have done the amendment, you should not blindly believe. You should check once, you should perform audit procedures, you should try to obtain audit evidence whether they have done the amendment properly. If you are satisfied, yes, management has done the amendment properly, they have given effect to the subsequent event as per accounting standards only. Now what will happen? Will you give a modified opinion? No. Not required. Why? We told the management, sir, you have to amend the financial statements. Management did not create any issue. They amended the financial statements. I performed audit procedures. I obtained audit evidence. They did the amendment perfectly only. Will I modify my opinion? No, there is no requirement to modify the opinion. Why? Because management are good people. They did not create any issue. They have agreed to modify the financial, they have agreed to amend the financial statements. I performed audit procedures. I came to know they have done the amendment also properly. You can give the audit report without any problem. You can give the audit report without modifying your opinion. But one small change you have to do. One small change you have to do. What small change you have to do is you would have already signed the audit report now. You would have already signed the audit report. Now, management amended the financial statements once again. They would have approved the financial statements once again. So, if you give the old audit report as it is, let me try to explain with the help of example. Example will make more sense. Assume that financial year 22-23. Initially, management gave me the financial statements and they approved the financial statements on 10th of April 2023. I conducted the audit. I gave my audit report on 15th of April 2023. After I gave the audit report, I came to know about subsequent events. Now I asked the management updated the financial statements. They amended the financial statements on 20th of April 2023. When they amended the financial statements, that amended financial statements need approval once again. Yes. Now these financial statements are amended financial statements approved by the management once again on 21st of April 2023. Now you can give the audit report without any modification. You can give audit report. But there will be one problem. What is the problem is, if you give the same audit report without any modification as it is, you have already mentioned the date as 15th of April. But now the management has amended and approved the financial statements once again on 21st of April. What did I say? Between date of approval of financial statements and the date of auditor's report, which one should always be earlier? Date of approval of financial statement should always be earlier. But here in this case, the date of auditor's report is 15th of April now. So this one change you have to make. What change you have to make is, the old audit report as it is you can give, but you will make one slight change. What one slight change you will do? You will just change the date as 21st of April or any date after that. You will just change the date and give the same to the management. There is no need of any modification. Understood? So only one slight change you have to do in this case. If the management amended the financial statements and if you are satisfied, yes, they have done the amendment properly, you obtained audit evidence also, you can give the old audit report only without any modification. But for procedural formality, one small change you have to make. You have to change the date and give that audit report to the management once again. Understood? So this is what auditor should do in case if the management agrees to amend the financial statements. See, this is a good scenario, positive scenario. When there is actually a problem, the problem actually starts when management says, no, sir, we will not amend our financial statements. I am telling, sir, I found a subsequent event. When I discussed with you, you also agreed this is an adjusting event. Financial statements need amendment. I asked the management, sir, please amend the financial statements. Management is telling, we will not amend the financial statements. Management is telling, no, sir, we will not amend the financial statements. Now it is a problematic scenario. Now what you should do? See, here also two cases will be possible. Management did not amend the financial statements, but audit report is not yet given to the management. Audit report is not yet given to the management, which means assume that, once again, examples will make the concept very clear. Listen carefully. I signed the audit report on 15th of April 2023. I thought tomorrow morning I will come and give the audit report to the management. But I signed it. I completed signing the audit report. But I did not hand it over to the management. I thought tomorrow I will come and give the audit report. But before I can give the audit report to the management, I came to know about subsequent event. I asked the management, please amend the financial statements. Management told, no, we will not amend the financial statements. So management is not agreeing to amend the financial statements. You have already signed the audit report, but this audit report is not yet given to management. You did not give the audit report yet to the management. Audit report is still in your handover only. Still in your possession only audit report is there. Then what you will do? Apply common sense. I am asking the management to amend the financial statements. They are telling no, get lost. Now audit report I have not yet given to the management. What I will do? Tear that audit report, throw it in the dustbin, give the new audit report which contains a modified opinion and ask them to circulate. Simple, no? See, if you have already given audit report to the management, then it is a problem. You signed, but you did not give that audit report yet to the management. Now management is disagreeing to amend the financial statements. Very simple. Whatever audit report which is already there with tear it, throw it in the dustbin, give a new audit report which contains a modified opinion. Why modified opinion? Why? Because I am telling management to amend the financial statements. They are telling we will not amend the financial statements. So give the tear that audit report, give the new audit report containing a modified opinion. See here also one more problematic scenario when it will happen is you sign the audit report. Audit report is already given to the management. Audit report is no longer in your possession. You have already handed it. You have already handed it over to the management. Now I am asking the management, sir, I gave you audit report. No, but now we got to know about subsequent event. Please amend the financial statements. Management told, get lost. We will not amend the financial statements. Now audit report is not there in your possession. Management has already taken the audit report. So first thing what you should do is, if the management is not agreeing to amend the financial statements and audit report is no longer in your possession, first thing you have to go and instruct the management. See here, go and instruct the management not to circulate the audit report. Go and tell the management, sir, I am asking you to amend the financial statements, but you are not doing it now. So whatever audit report I have given to you, don't circulate it. Don't circulate it. Why? Because I will give a new audit report containing modified opinion. You please don't circulate my audit report till my further notice. Don't circulate it. Some managements will listen. Some managements what they will do is, no, we will circulate. You went and told them, sir, don't circulate the audit report which I have given to you. I will give you new audit report, then only you circulate. First you go and instruct the management. Even after you gave the instruction also, management circulated. They did not listen to you. You told, sir, please don't circulate. But still they have issued to the shareholder. Now what standard says is, if the management has circulated, as an auditor, you take appropriate action to stop reliance. To prevent the people from believing that audit report, auditor should take appropriate action. Sir, what appropriate action auditor can take to stop the people from believing the auditor's report? Media advertisement you can do, newspaper announcement you can do, you can inform it to the stock exchange, or you can ask the company to update that in the official website. So whatever it is, if management agreed and did not circulate the audit report, well and good, fine. If the management did not circulate, they told, okay sir, we will not circulate, then what I will do is, I will take that report from them, I will give a new audit report containing a modified opinion and ask them to circulate. If without listening to my instructions, management circulated the audit report, now what I will do? Now the standard says, as an auditor, you take appropriate action. You take appropriate action to stop the people from believing auditor's report. Sir, what appropriate action I have to take? That you have to use your professional judgment. I will say newspaper advertisement, media advertisement. So these kind of something you try to do to stop the people from believing the audit report, then give the new audit report which contains a modified opinion and ask the management to circulate this once again. Clear? Able to understand? Very simple guys. Just to be practical, you will understand it. So common sense is there here. Just common sense has been complicated here. Nothing else. Shall I revise? Done. We are done with one case. What will be auditor's responsibilities in case if he comes to know about subsequent events after the auditor's report, but before financial statements are issued. So if auditor came to know about I am revising this entire scenario. Listen carefully. If auditor came to know about subsequent events before the financial statements are issued, first what we should do? Go and discuss the matter with management. And as a part of that discussion, determine whether financial statements need amendment. If the financial statements need amendment, inquire the management whether they are ready to amend the financial statements or not. If the management agreed to amend the financial statements, well and good. Try to perform audit procedures, try to obtain audit evidence whether they have done the amendment properly or not. If everything is fine, you can give unmodified opinion. That means you can give the existing audit report only. You can, but one slight change you have to make. You have to change the date and give the same audit report. No need to worry about it. Next. What is a problematic scenario is, I am asking the management to amend the financial statements. Management is telling, no, we will not amend the financial statements. This is a problem. Here also two cases will be possible. Management is not agreeing to amend the financial statements. You signed the audit report, but you did not give it to the management yet. If you did not give it to the management yet, that is even once again a favorable scenario. What I will do, I will tear my audit report which I already signed, give the new audit report containing a modified opinion, hand it over to the management. When actually the problem arises is, audit report has already been given to the management. Audit report is no longer in my possession. I signed it, gave it to the management also. Then I came to know about subsequent event. Now what I should do? First I have to go and instruct the management. Sir, please don't circulate the audit report. I will give a new audit report containing a modified opinion. Then only you circulate. If without listening to my instruction, management has already circulated the audit report, then what I should do? Then I should take appropriate action to stop the people from believing that auditor's report. Then finally, once again, a new audit report I will give containing a modified opinion, ask the management to go and issue this new audit report. Clear? So this is one scenario. Now comes one more complicated scenario, which is the impact is somewhat bigger than when compared with the previous case. What is now the case? In the case 2, I came to know about subsequent event. By the time I came to know about subsequent event, financial statements have already reached the third parties. By the time I came to know the subsequent event, management already circulated all the financial statements, auditors report, they are already there with the shareholders, bankers, third parties, whoever it is. By the time I came to know about subsequent event, financial statements are already issued to the public. In that case, what you will do? Here also, first, the moment you came to know about subsequent event, go and discuss the matter with the management. You got to know about subsequent event, no? Go and discuss with the management. And as a part of that discussion, determine whether financial statements need amendment. And as a part of that discussion, inquire the management whether they are ready to amend the financial statements or not. You go and ask them whether financial statements need amendment. First, you have to go and discuss with the management. As a part of that discussion, you will try to decide whether financial statements need amendment and whether management is ready to amend the financial statements or not. Three common things you will do. Now, if you decided that there is a subsequent event and financial statements need amendment, first thing what you have to do in this case is, see, you discuss the matter with the management. You determine financial statements need amendment. Whatever financial statements that are already circulated to the shareholder, those are required to be amended, that you have decided. First thing what you have to do here is, you have to first go and ask the management to take appropriate action to stop reliance on the report. Financial statements are already issued. Now you come to know there is a subsequent event and you decided financial statements need amendment because of that subsequent event. But financial statements are already there with the shareholders, no? So in this case, the first step which auditor should do is go to the management and ask them, sir, you take some appropriate action to stop the people from believing audit report and financial statements. You go and ask the management. Ask the management to take appropriate action to stop the people from placing reliance on audit report and financial statements. Sir, what appropriate action management could take? Once again, same, if you apply your professional judgment, what appropriate action they can take? They can give a newspaper advertisement, they can send an email to the shareholders, they can release a press note. So whatever it is, go and ask the management, sir, please take appropriate action to stop the people from believing the auditor's report. I went to the management and told, sir, please take appropriate action. Management told, go get lost, we will not take any appropriate action. We will not take any action to stop the people from believing auditor's report. Then what should happen? In that case, the standard says, if the management is not taking appropriate action, auditor himself has to take the appropriate action. You went to the management and told, sir, please take some action to stop the people from believing audit report. Why? Because we have to amend the financial statements. No. But management told, no, we will not take any appropriate action. Then what does the standard say? Auditor himself has to take appropriate action. He has to give the advertisement. He has to give the media address, etc. Sir, he will incur the cost for that. No, don't worry. Company has to compensate for him. Whatever cost that he will incur, company has to compensate for that cost. We'll talk about it. We need not go into that details. Just remember two things. If you decided financial statements are already issued, but if you decided financial statements need amendment because of subsequent event, first step what you should do is go to the management and ask them to take appropriate action to stop the people from relying auditor's report. If the management refuses to take any action, the auditor himself has to take appropriate action to stop the people from believing auditor's report. So whatever it is, either auditor or management, first step is take some action to stop the people from believing auditor's report. Then what will happen? Then we will sit and decide, is management ready to amend the financial statements, or management does not agree to amend the financial statements. Here management is very good management. They told, sir, we will amend the financial statements. We don't want to mess with the auditor. Why? Because auditor will make our life a mess. Most of the management will cooperate. So management told, okay, sir. First step, someone has taken an action to stop the people from believing auditor's report. Then management told, okay, sir, we will amend the financial statements. Now, when the management amended financial statements, what will happen? Same here. You perform audit procedures, whether they have done the amendment properly, and also you try to obtain sufficient and appropriate audit evidence, whether they have done the amendment properly or not. If they have done the amendment properly, I have evidence also that they are doing the amendment properly. Now, what I will do? I will give a new audit report. I will give a financial statements are amended. No, I will give a new audit report. Will I modify my opinion? No, I will not modify. Why? Why? Because management did not create any issue. No, I told management need amendment. Appropriate action has been taken to stop the people from believing auditor's report. Management amended the financial statements. I verified the amendment. Everything is fine. So I will give a new audit report without any modification. Why? Because your financial statements are perfectly fine. Amended financial statements are also fine. I will give unmodified opinion only. But here standard will say one more thing. See, one copy of the financial statements and audit report has already reached shareholder. Now you are sending one more copy of the financial statements, amended financial statements along with audit report. You are sending it to the shareholder once again. Now shareholder will be left with two copies of the financial statements. He will get confused, no? So what they are telling is, on the amended financial statements, auditor will give audit report, no? Give unmodified opinion only. But you use an paragraph, emphasis of matter in the audit report, in the new audit report, you use emphasis of matter paragraph. In that paragraph, you highlight what is the difference between previously issued financial statements and the financial statements which are given now. Nothing but in the new audit report, use the emphasis of matter paragraph to highlight the effect of amendment. What amendment has taken place? To highlight that effect of amendment, you have to use the emphasis of matter paragraph. As simple as that. That's it. So, if the first someone has taken an appropriate action to stop the people from believing auditor's report, then management agreed to amendment. Then we have verified the whether the amendment is done properly or not. We will give a new audit report. We will give unmodified opinion only, but we will have to use either emphasis of matter or other matter. Generally, we use emphasis, but the standard has given an option in the new audit report. Either use emphasis of matter paragraph or other matter paragraph. For what purpose, sir? Why? Because shareholder will be left with two copies of the financial statements. Use the emphasis of matter paragraph in the audit report and highlight what amendment has taken place in the financial statements to avoid the shareholders' confusion. Clear? Sir, what about the other case, sir? Management told we will not amend the financial statements. Management told we will not amend the financial statements. Then what auditor will do? He will give a new audit report. In that audit report, he will give modified opinion, either qualified or adverse opinion he will give, and anyhow he will explain the reason why he is giving the modified opinion in the basis for modified opinion paragraph. In the basis for modified opinion paragraph, he will say financial statements need amendment, but the management is not giving any amendment. That's why I'm giving the modified opinion, and this report will be circulated to the shareholder. Do you think here also emphasis or other matter paragraph is required? No. In this case, emphasis or other matter paragraph will not be required. Why it will not be required? Why? Because we are anyhow explaining the reason in basis for modified opinion paragraph, no? So no need to explain it once again in other matter paragraph. No need to explain it once again in other matter paragraph. So you have to explain the reason in the basis for modified opinion paragraph. Understood? So this is what auditor should do in case if the auditor came to know about subsequent event after the financial statements are issued. Guys, answer is going to remain the same. So first you have to discuss, determine, inquire whether financial statements are, whether the management is ready to amend or not. If you have decided financial statements need amendment, first you go and ask the management to take appropriate action to stop the people from relying on the auditor's report. If the management refuses to take any action, the standard says as an auditor, you yourself has to take an appropriate action. You yourself have to take appropriate action to stop the people from relying on the auditor's report. Then we have to ask whether management amends or does not amend. If the management agree to amend the financial statements, we will perform audit procedures and will try to obtain audit evidence whether amendment has been done properly or not. If it is done properly, we will give a new audit report. We will give unmodified opinion only. But since shareholders are left with two copies of the financial statements, we will, in the new audit report, we will use either emphasis or other matter paragraph to highlight the effect of amendment. If the management doesn't agree to amend the financial statements, we will give a new audit report which contains a modified opinion, that is either qualified or adverse opinion, and we will also explain why we are giving modified opinion in the basis for modified opinion paragraph. Here in this case, there is no need of emphasis of matter, there is no need of other matter paragraph. Okay, so this is what the auditor's responsibilities will be in case of subsequent events. Okay, so under two cases we have divided and we have explained it. So now what I want you to do is, I want you to quickly go through this charts. I will show it on the screen only. No need to open your copies, whatever you have. I will show it on the screen itself. I will give few minutes of time or 2 minutes of time I will give. First to go through this. Then I will show you the second chart also. then you have to go through this also. Just recollect, rewind. If possible, for better remembrance, for better understanding, you can copy it also once. Anyhow, I will share this with you, but still I want you to copy it. If you could copy it once again on your own by recollecting once again all these things whatever I have told, if you try to copy it along with understanding whatever concept I have explained, that will be much better. That will be very very better. So I would suggest you, so do one thing, it's a compulsion now, please copy it. I'll show it on the screen. You try to recollect the concept and you try to copy it. Come on, do it fast. Do it fast. You can pause the video and you can copy it, but please don't skip this part. You have to do it. So first to this one, you copy, you skip the video for a while. So you have to copy this once. Take your time and copy this. Yeah, I think here the screen is full. So here you can pause the video and copy this. And next, after you have copied that, you pause here and copy this part also. You pause here and copy this part also. So pause the video for a while and copy it. So with this, we are all done with the conceptual understanding. So whatever we have understood now, everything is there in the material. Now we have to start reading the content from the material and finish the standard. So first of all, definitions they are giving. I think all the definitions I have explained. You can go through these definitions once. What is the meaning of subsequent event? What is the date of financial statements? What is the date of approval of financial statements? Date of auditor's report? Date the financial statements are issued? Everything I have explained. You can read it. Exact definitions. Whatever I have told you, the same definitions will be there. One more definition also they are adding: subsequent events as per financial reporting framework. Sir, what do you mean by financial reporting framework? Nothing but accounting standards. They are also telling you what are subsequent events as per accounting standards. This also I have explained, you know. Anyhow, let us read it once again. Financial statements may be affected by certain events that occur after the date of financial statements. Many financial reporting frameworks, many accounting standards specifically refer to such events. And such financial reporting frameworks ordinarily identify two types of events. As per accounting standards, subsequent events are divided into two categories: those that provide evidence of conditions that existed at the date of financial statements. This only we call it as adjusting events. Those that provide evidence of conditions which already existed as on balance sheet date. And another category, those that provide evidence of conditions that arose after the date of financial statements. This we call it as non-adjusting events. This we call it as non-adjusting events. Nothing else, guys. They are only asking you what is the definition of subsequent events as per financial reporting framework. What is financial reporting framework? Nothing but accounting standards. That only you have to know. So if they ask you what are subsequent events as per financial reporting framework, don't get confused. They are asking you to write the meaning of subsequent events and types of subsequent events as per accounting standards. So adjusting, non-adjusting. Then objective. Sir, why this standard has been given? What is the purpose of SA 560? Let us see. The objectives of the auditor are to obtain sufficient and appropriate audit evidence whether events occurring between the date of financial statements and the date of auditor's report that require adjustment or disclosure in the financial statements are appropriately reflected in those financial statements. So one of the objective of the auditor as per SA 560 is, as an auditor, you try to obtain sufficient and appropriate audit evidence whatever events which have taken place between the date of financial statements and the date of auditor's report, and that require adjustment in the financial statements. That means if you find any adjusting events, whether all that events are properly reflected in the financial statements or not, that we need to obtain audit evidence. Nothing but whether AS4 related requirements are properly complied with or not, that we need to check. Understood? So as an auditor, we should try to obtain audit evidence, sufficient and appropriate audit evidence, whatever events occurring between the date of financial statements and the date of auditor's report, which require adjustment in the financial statements, whether they are adjusted, whether they are properly reflected in the financial statements or not, that we need to obtain audit evidence. Next one, respond appropriately to the facts. Respond appropriately to the facts that became known to the auditor after the date of auditor's report. They had had they been known to the auditor at the date, may have caused the auditor to amend the auditor's report. Nothing but the summarized version of this point is, in case if you came to know about subsequent event after the date of auditor's report. And if you believe that had I known this event earlier, I would have changed my auditor's report. Such a fact you came to know after signing the auditor's report, and you believe that had I known about this event at the time when I was giving the audit report, I would have changed my auditor's report. Such a event came to your knowledge after you signed the audit report. Then you have to respond appropriately. Sir, how to respond appropriately, sir? That's what I have explained you in the charts. Whatever I have explained you in these two charts, that is nothing but how to respond appropriately only. So in the objective they are telling respond appropriately in case if you came to know about subsequent events after the date of auditor's report. Sir, how to respond appropriately? That they are trying to say here, where they are saying that they are trying to say it here in the same standard. This is how you have to respond. Nothing but what they try to say it in the D point is, that's the same thing I have tried to summarize in the form of this two charts. Able to understand, able to link whatever I am trying to say. So as per SA 560, two objectives are there for the auditor. Number one, try to obtain sufficient and appropriate audit evidence. Whatever events which require adjustment, everything has been properly reflected in the financial statements. If at all you came to know about subsequent events after the date of auditor's report, and you believe that had I known this earlier, I would have changed my auditor's report, then respond appropriately. Sir, how to respond appropriately? That's what I have explained you till now. Okay, next one. Sir, before I can fulfill my responsibilities, first, how I will come to know whether subsequent events are there or not? As an auditor, I told you when you came to know about subsequent event, how to respond appropriately. Sir, but how I will come to know about subsequent events, sir? Whether there are any subsequent events or are there or not, how I will get to know? You will not get to know it automatically. Only when you perform some audit procedures, then you will come to know whether there are any subsequent events or not. I explained you through this chart. In case if you came to know about subsequent events, what responsibility you have to fulfill. But my question is, sir, as an auditor, how I will come to know subsequent events are there or not? If you perform audit procedures, then you will come to know about subsequent events. And if by performing those audit procedures, you have come across subsequent events, then you will respond appropriately. Sir, what audit procedures I have to perform regarding the subsequent events? Very simple, 4 points they will say. The auditor shall perform the below mentioned audit procedures to ensure that all subsequent events are identified. So if you want to identify all the subsequent events, you have to perform the below mentioned audit procedures. What are they? Number one, obtain an understanding of procedures the management has established or followed to ensure that subsequent events are identified. If you pay attention carefully, before auditor can identify subsequent event, management is having the responsibility to identify subsequent events. Why? Because the management is responsible for preparation of financial statements. When they are preparing financial statements, they are responsible for complying with accounting standards. So before auditor, who is primarily responsible for identifying subsequent events? Management. So first they are asking you to go and understand what process management has followed to identify subsequent events. Because before auditor, there is a primary responsibility on the management to identify the subsequent events. So first to go and understand what procedure management has followed to identify the subsequent events. First to go and understand it. So once you have understood what process management has followed to identify the subsequent events, the second procedure which you need to perform is inquiring of the management and where appropriate those charged with governance as to whether any subsequent events have occurred which affect the financial statements. Simply, once you understood what process management has followed for identifying subsequent events, then you go and directly inquire with the management and those charged with governance. Go and directly ask them, sir, did you identify any subsequent events? Go and ask them. So you have to do inquiry. Then you have to read the minutes. If any of the meetings of entities, owners like shareholders, management, and those charged with governance that have been held after the date of financial statements, and inquire about matters discussed at any such meetings for which minutes are not yet available. So nothing but as an auditor, in order to know whether there are any subsequent events, if you came to know that any meetings have taken place after the balance sheet date, like for example, you came to know some board meeting happened on 5th of April, go and read the minutes of the meeting, whether in that board meeting, whether any subsequent event has been discussed. So if you go and read the minutes of the meeting of those meetings which have taken place after the date of financial statements, then also you can come to know about subsequent event. and you came to know that there is a meeting happened, but you are not able to find the minutes. Ask the management why minutes of that meeting are not available. So whatever it is, you try to understand whether any meetings have taken place after the date of financial statements. If yes, go and verify that minutes. From that also you will come to know any subsequent events have taken place. And also read the entity's latest subsequent interim financial statements. See, if any quarterly financial statements are available, go and read that quarterly financial statements also. From that quarterly financial statements also, you can come to know about the subsequent events. And in addition to all that, the auditor shall request the management and where appropriate those charged with governance to provide written representations. Ask the management to give a written confirmation that all events occurring subsequent to the financial statements and which require adjustment have been properly adjusted. Ask the management to give written representation also. We have already discussed SA 580. So SA 580 says if there is any standard asking you to obtain written representation, you must obtain. So SA 560 is saying, sorry, SA 580 says you need to obtain written representation regarding any other, if any other standard says it. So now SA 560 is saying to obtain written representation regarding subsequent events, you have to get it. Clear? So these are the 5 audit procedure which auditor needs to perform to identify the subsequent events. See, before we can fulfill our responsibilities, first we should know whether subsequent event is there or not. Sir, how I can get to know whether subsequent event is there or not? They have mentioned 5 simple audit procedures. First, understand the process which is followed by the management. Number 2, inquire the management and those charged with governance whether they have identified any subsequent events. Find out whether any meetings have taken place after the date of financial statements. Read the minutes of the meeting. Read also the latest interim financial statements and also ask the management to give written representation. Clear? So by doing these 5 audit procedures, you will come to know whether there are any subsequent events or not. If you find out any subsequent events, then what are your responsibilities? That we try to explain it in the next paragraph. Let us try to read that also. This is not something new. This is something which I have summarized already in the form of charts which I have shown you just now. So if we start reading point number D, same here, like the way we have divided the auditor's responsibilities into 2 cases. Here also in the material, we have divided the scenarios into 2 cases. First one, facts which became known to the auditor after the date of auditor's report, but before the date the financial statements are issued. As an auditor, you got to know about subsequent event. After you signed the audit report, then only you got to know it. But you got to know about that subsequent event before the financial statements are issued to the public. However, second case, facts which became known to the auditor after the financial statements are issued. In the second case, by the time you came to know about subsequent event, the financial statements are already issued. So now what are auditor's responsibilities in both the cases? Let us have a look at it. The auditor has no obligation. So first I am talking about the first case. What if auditor came to know about subsequent event before the financial statements are issued? First one, the auditor generally has no obligation to perform any audit procedure regarding the financial statements after the date of auditor's report. In general circumstances, the moment you sign the audit report, after that you need not perform any extra procedures. But however, when after the date of auditor's report, but before the date the financial statements are issued, a fact becomes known to the auditor that had it been known to the auditor at the time of or at the date of auditor's report, that may have caused the auditor to amend the auditor's report. See, if you do the collective reading of what these 2 paragraphs, what they are telling is, generally in the normal circumstances, the moment you sign the audit report, your responsibility is over. You are not supposed to do anything. But in case after you signed the audit report, but before financial statements are issued, you came to know about some event and you believe that had I known this fact at the time when I signed the audit report, I would have given a different audit report. If such a fact came to your knowledge now, then you need to perform the extra responsibilities. You will understand? Very general statement, guys. First, they are telling generally the moment you sign the audit report, nothing you are supposed to do. But in case if you came to know about a fact, if you believe that had I known this fact earlier, I would have changed my auditor's report. Such a fact came to your auditor's knowledge now. Now you need to perform extra things. What I need to perform, whatever we have summarized in the chart here. So if I came to know about subsequent event, then what I should do? First, I have to go and discuss the matter with management, and where appropriate, you can also go and discuss with those charged with governance. As a part of the discussion, determine whether the financial statements need any amendment. If so, inquire how the management intends to address the matter. That means whether management is ready to amend or not. The same thing we have also mentioned here. So first, the moment if you came to know about subsequent event before the financial statements are issued, discuss the matter with the management, determine whether financial statements need amendment, inquire how the management wants to take up this further. So now also two things can happen. If management amends the financial statements, so if you come to this chart, this one, if management amends the financial statements, then what you will do, carry out audit procedures necessary in the circumstances and try to obtain sufficient and appropriate audit evidence regarding the amendment. The same things I have explained here also. Perform audit procedures, try to obtain audit evidence. Sir, what if management does not amend the financial statements? What will happen if the management did not amend the financial statements? Now they are talking about this case. So if the management did not amend the financial statements, when the auditor concludes that financial statements are not amended and if the auditor's report has not yet been provided to the entity, now you have management did not agree to amend the financial statements, you have not yet given the audit report to the management. Now what auditor will do? In that case, the auditor shall modify the opinion and provide the auditor's report. If you have not yet given the audit report, tear that audit report, give a new audit report containing a modified opinion to the management. However, if audit report is already provided, so in case if audit report is already given to the management, then what I should do? If the auditor's report has already been provided to the entity, the auditor shall notify management and those charged with governance not to issue the financial statements to the third parties before necessary amendments have been made. First thing, you have to go and instruct the management not to circulate the auditor's report. Then they say one more thing also, if the financial statements are nevertheless subsequently issued, nevertheless means without listening to the auditor's instructions, management still went ahead and issued the financial statements without necessary amendments, then what did I say? Auditor shall take appropriate action to stop the reliance on auditor's report. Then in that case, as an auditor, if the management did not listen to you, still issued the financial statements, then you have to take appropriate action to stop the circulation. And then finally, the last point is implied. Finally, we'll give a modified opinion and then give the new audit report to the management, ask them to circulate. This they need not say it expressly, that is implied. So this is what auditors should do in case if we came to know about subsequent event before the financial statements are issued. So this paragraph might look very lengthy, but when you take the help of this chart, just in a fraction of minutes, you will be able to understand it and present it in a proper way. Now let us talk about the other case. Sir, what if the facts become known to the auditor after the financial statements are issued? See here also two general statements, like the way they have told A and B here, the same thing they try to say here also. So here also what they say is, generally, the moment the financial statements are issued, you are not supposed to do anything. But if you came to know about a fact after issue of financial statements, and you believe that had you known this fact at the time of auditor's report only, you would have given a different audit report. Such a fact came to your knowledge, then you need to perform these extra things. Very general statements, guys. So don't try to stretch them, don't try to do different interpretations and make yourself fall in the trap of confusion. Very simple thing what they say is, generally, once you sign the audit report or once the financial statements are issued, we will not do anything in normal circumstances. But if we came to know about a fact, and if we believe, have I known this earlier, I would have given a different audit report. Such a fact came to your knowledge now. Then what we will do? Then we will perform some extra things. What we will do here also, discuss the matter with the management, determine whether financial statements need amendment, inquire how the management wants to address the issue. Same thing here also, discuss, determine, inquire. After that, if management amends the financial statements, management told, okay sir, we will amend the financial statements. Then what we should do? Carry out the audit procedures necessary in the circumstances on the amendment. So they follow a different order here. They will try to say the same thing only, but they will try to say a different order. So first they are telling you do these three things. Then management agrees to amend the financial statements. What we will do? Perform audit procedures, obtain sufficient and appropriate audit evidence whether they have done the amendment properly or not. Review the steps taken by the management to ensure that anyone in receipt of the previously issued audit report together with the auditor's report is informed of the situation. Nothing but now they are referring to this point. We have to check whether management has taken appropriate action to stop the people from believing the auditor's report which has already been issued. See, the chart which I have presented, it is a correct order. But in the material, in the original standard, if you read, it is very much unorganized. So all this content, I tried to organize it in a proper way in the form of this chart. Even whatever they are saying in the material, the same thing I am saying it in the chart also. But I changed the order, that's it. So in the standard, what they have told us, first I will discuss the matter with the management, determine whether financial statements need amendment, inquire how the management intends to address the issue. Then they directly first told this point: if the management agreed to amend the financial statements, what I will do? I will perform audit procedures, obtain sufficient and appropriate audit evidence. Then I will check whether management has taken appropriate actions to stop the people from believing the auditor's report. After that, provide a new auditor's report on the amended financial statements. So if in case if the management has amended the financial statements, I will give a new audit report. Will it contain any modification? No, it will not contain any modification, but I will give emphasis of matter or other matter paragraph describing the effect of amendment. So same here, I will not give any modified opinion, but I will use either emphasis of matter paragraph or other matter paragraph to highlight the amendment. And one more thing they say here, sir, what if management did not take necessary steps to stop the people from relying on the auditor's report? If the management is not taking appropriate action, as I have told, auditor himself shall take appropriate action. No, that thing they try to say it here. If management does not take necessary steps, the auditor shall take appropriate action to stop the people from relying on the auditor's report. Guys, whatever they are saying here, material chart says the same thing. Just I changed the order for better understanding. So in this case, first we will discuss determine inquire. Then we will, if the management agreed to amend, we will perform audit procedures, check amendment has been done properly or not. We will give a new audit report, will not give any modification, but include an emphasis or other matter paragraph. But before this, I have to check whether management has taken appropriate action to stop the people from believing audit report. If the management did not take appropriate action, auditor himself has to take appropriate action. If you read the material, you will not be able to find this thing in the chart, in the material, sorry. This entire content, whatever I have given here, this will not be, this you will not be able to find it in the chart. Sir, why we will not be able to find it in the chart? Why? Because this is something which is implied. This need not be expressly stated in the standard. It is implied. It is an implication. See, standard is only telling what if the management agrees to amend, what you are supposed to do. That impliedly means that if the management did not agree to amend the financial statements, we have to give a modified opinion, explain the reasoning basis for modified opinion paragraph. This is there a requirement for the standard to say it separately? Not required. This is something which is implied. Okay, so this, even though this context is not there in the material, but this is what will happen. You will have that blank, no, sir, you explained management agreed to amend the financial statements. This is what you should do. Sir, what if management does not agree to amend the financial statements? You will have that open-ended discussion. So that's why, to give a whole perspective, I explained the other case also, but this is not expressly stated, that is implied from the content given in the standard. Okay, so this is what they have said it in the material. Once again, I am telling, if you directly read it without understanding of the concept, no, then this standard will be a nightmare. If you have understood the concept clearly, whatever I have explained, if you are able to link it with all the examples, if you are able to take the help of this charts, you trust me, this standard will not take more than 10 minutes to revise or prepare. So that is where the conceptual clarity comes into. That's why I always keep on saying conceptual clarity is very, very important. Clear? So that's all. The standard is done. So please take the help of the chart. That will simplify the entire content. Okay. So what we discussed in the standard, first we have understood a few definitions, then we understood what are the objectives of the standard, why this standard has been given, then we have seen what audit procedures you need to perform to identify the subsequent events, then what are your responsibilities. Those responsibilities we have in fact divided into two cases. Understood? Clear and comfortable? Now let us have a quick look at the questions also. Sir, how the questions will be tested from the SA 560. Let us have a quick look at that questions also once. For your reference, I have given questions at the end. Let us see. The auditor shall perform audit procedures designed to obtain sufficient and appropriate audit evidence that all events occurring between the date of financial statements and the date of auditor's report that require adjustment or disclosure have been identified. Explain. A very bit vague question. So they have given one statement. What they are telling, as an auditor, you should perform audit procedures to obtain audit evidence regarding subsequent events. This is a summary of that statement. And they're asking you to explain. You tell me, in the standard, which paragraph sounds more reasonable here? Since they are saying, as an auditor, you should perform audit procedures to obtain audit evidence regarding subsequent events, the intention is, the question's intention is, as an auditor, what are those audit procedures that you will perform to identify subsequent events? A very vague question, I will say. Yes, it is a very vague question, but that is what the answer expected from you. So they are just giving one statement. As an auditor, you will perform audit procedures to identify the subsequent events. Explain. That means indirectly they are asking you what audit procedures you will perform to identify the subsequent events. So if they are asking you about audit procedures, which paragraph you will write? C paragraph you are supposed to write. This paragraph you are supposed to write. Next one. Next question. As per SA 560, subsequent events are the events occurring between the date of the financial statements and the date of approval of the financial statements and fact that became known to the auditor after the date of auditor's report. Do you agree with that? No. This is the definition, but they have given a wrong definition here. Subsequent events are those events which are happening between the date of financial statements and the date of auditor's report, not the date of approval of financial statements. So the given statement is false, and then you write the correct definition. Next one. Third one. The auditor has no obligation to perform any audit procedure regarding the financial statements after the date of auditor's report. However, when after the date of auditor's report, but before the date the financial statements are issued, a fact becomes known to the auditor that had it been known to the auditor at the date of auditor's report may have caused the auditors to amend the auditor's report. Explain the auditor's obligation in the above situation. What answer you will write here? They are talking about auditor's responsibility. And before issuing financial statements or after issuing financial statements, they're talking about auditor. If auditor came to know about subsequent event before the financial statements are issued, then what you will do? Nothing but indirectly they are asking you to write this first point. Facts which became known to the auditor after the date of auditor's report, but before financial statements are issued. We have paid attention how they have asked the question is A and B sentences are there? No. This they have given as it is, and at the end they have given explain the obligation in the given case. So that means they have given this paragraph as it is, and they're asking in this case what you will do. So you have to write this auditor's responsibilities. Understood? So while reading the question, you have to be very attentive. So sometimes people will get the confusion. Sir, should I write about case 1 or case 2? You should not get that confusion. If you read the question carefully, you will come to know. They have mentioned here before the date the financial statements are issued, then the auditor came to know about subsequent event. So you have to write about case 1. Next, fourth question. After the financial statements are issued, the auditor has no obligation to perform any audit procedures. However, when after the financial statements have been issued, a fact become known to the auditor. Had it been known to the auditor, he would have caused the auditor to amend the auditor's report. In that case, what auditor should do? Now which paragraph you will write? Now case 2 you will write. What auditor should do in case he came to know about subsequent event after financial statements are issued. After financial statements are issued. Sir, how to identify it? In the question itself, they are clearly saying after the financial statements have been issued, then auditor came to know about the fact. So that paragraph you are supposed to reproduce here. Next one. SA 560 subsequent events deals with auditor's responsibilities relating to subsequent events in an audit of financial statements. We all know this. SA 560 talks about auditor's responsibility relating to subsequent events. Financial statements may be affected by certain events that occur after the date of financial statements. Many financial reporting frameworks specifically refer to such events. Explain those events and also define subsequent events. What they are asking? Number 1, they are asking subsequent events definition as per SA 560. In addition to that, they are also asking explain those events. Those events means which events? Those events which financial reporting framework has identified. Nothing but they are asking you to define subsequent events as per SA 560 also. They are also asking you to define subsequent events as per financial reporting framework. Nothing but they are asking you to write the subsequent events as per accounting standards. They are also asking you to define the subsequent events as per SA 560. Clear? So what answer you have to write here? If you go to the standard, if you go to the definitions, we have to write this first point. This is the definition of subsequent event as per SA 560. Then what are subsequent events as per financial reporting? That is addressed in point number 6. 1 and 6 both we are supposed to answer. Both points we are supposed to write. Okay. So that is what will be the answer for fifth question. Understood? So guys, this is what regarding SA 560. Hope you guys have understood the session carefully. You have understood the concept very clearly, and I hope you will be able to use the concept whatever you have learned here in this session in your examination. Thank you very much. Bye.